6,000 on the S&P 500. We are extremely overvalued. This is the Buffett indicator. It's market cap to GDP. We're at over 200%. The ratio 2.06, 206%. The reading over here at the 2022 high was 208%. Bursting of the tech bubble was at 150% or 1.5. Valuation, the high valuation tells us is that, hey, we're going to have lost decade. Now, does that mean we're going to peak in the stock market and drop for 10 years straight? No. That means that we're going to have over the next 10 years, probably beyond 10 years, low returns or negative returns. That means we're going to see something like what we saw in 2013, where you have a sell-off, a bear market, you rebound, you get a new bull market, and then you get another bear market. And you get these long periods of drawdowns where you go nowhere, sell off sharply, you get a rebound, and you go back and end up taking out the lows made first bear market. And again, we're probably going to see a couple of bear markets over the next 10-year plus period. That's what this is telling you. It's telling you that the market is extremely overvalued and it's unsustainable. That's what this is telling you. Has to be a great reset. Go back to fair value or undervalue with the valuations like the Buffett indicator here, or like with the Shiller PE ratio. Valuations, and they're at extremes, and they're telling us expect low or negative returns over the next 10 plus years. That is what it is telling us. And it's going to go straight down. It means it's going to drop, it's going to rebound back up, and then it's going to drop some more. It just goes straight down for 10 years, 13 years, or whatever straight. S&P rally took us up towards this trend line. We didn't quite reach it. I told you that 6,000, that low 6,000 area is coming into play. I've been talking about what's my target level, 5750, the trend line excluding the shadow. We already hit that, to the 6,000 area. It's a trend line in black, including the shadow from 2000. And again, this nearly 100-year trend line. By the way, I was talking about valuations. Here is, again, valuations at 150% with the Buffett indicator there. And again, we went nowhere. We went nowhere for 13 years. It wasn't until 13 years after the 2000 top where we started going to new highs. This peak right here was 25 points, and then we had a new crash down to a new low. Same thing in the 1960s and 70s. Had a lost 16.5-year period before you went and made new highs. The trend line we're hitting right now that we're just underneath, and again, eyeballing it, it looks like it's around, again, 6,020 to maybe 40 or so, that range right there. But this trend line is, term resistance. It was the 1929 crash that started this trend line. It was followed by the 2000 dot-com crash, the bursting of the tech bubble. It's likely we're going to see the same thing here that will eventually take us back down to this trend line right here and to the pandemic low right there. Down to this level right here, but my guess, which is the previous peaks here at 5750 and 5775, we only went 25 points above that previous peak. My guess is we're going to come down here and see a 50 to 65% drop on the S&P 500. Then I think you're going to get a new bull market. I think you're going to get another bear market that's going to go to a new low, like we did over here, with the 73-74 crash. What the high valuations are telling us is likely going to be the case, that you're going to have a long period of a drawdown, like over here and here. Okay, a long period of a drawdown over here and here. It wasn't 25, it was 25 years until you made new highs after the 29 crash. If you bought the top, dollar cost average, about the top there, again, by the time you made new highs and went back up to those levels, you were probably dead. That's what the high valuations tell us. Just under the trend line, in my opinion, I think we're going to witness a top around this trend line with the high valuation, 206% with the Buffett indicator. We're at these levels. You had the S&P peak just under this trend line, and it ended up dropping 27.5%. That was, the people that told us that was never going to happen. So that's the bear market, and it's over with, and we're in a new bull market, and here we go. Part of the larger bull market cycle. 20% proves it was a bear market. No, it doesn't. Was the pandemic drop of 35% in 3.5 weeks? Was that the shortest bear market in history? No, it was a correction, a major crash larger bull cycle. The bull market never ended. People don't understand. People that told us it wasn't going to happen are now the people telling us, oh, it was a bear market. It wasn't going to happen. Look, the market takes its time doing what it's going to do. People get complacent and they don't. Just like 2000. We were told there was nothing taking down the market in 2000. The bursting of the tech bubble. Possible way it goes down. And yet, that dropped very quickly, 42%. The Dow dropped over 40% when it first had the first leg down after the 1929 crash. Getting this big rally with the presidential election, the market likes certainty. We have certainty. Wall Street likes Trump's policies, economic policies. People saying, well, we're going to have this big move. New bull phase. Problem is, as good as maybe President Trump's economic policies may be, it's not enough. It's too late to prevent a recession from happening. The recession indicators have already been triggered, as I've said. Current policies that are already in place. We haven't had the recession yet is because the government's spending nearly $8 trillion a year, and that's prevented it from showing up yet. The Trump campaign has been talking about cutting the spending levels. If they do that, again, you're going to get that recession. So again, getting the warning sign that recession's going to happen. Now, Trump's economic policies might shorten the recession. It might send the pain if he does some of the things he's talked about. No tax on tips, taxing Social Security benefits, taxing overtime. That could help. Not going to stop the recession from happening. And it may shorten the recession. Again, the recession will probably go into 2026, maybe late 2025, and then we'll start a new bull market. But even if he implements good economic policy, it's going to take time to work its way into the economy. It can't work its way into the economy fast enough to prevent a recession from happening. So you have to understand, we're still going to have the recession regardless of the outcome of the presidential election. President Trump is going to inherit a recession. The recession indicators are already flashing. It's going to happen. Wall Street's celebrating. That's why we're getting the rally, but we're rallying likely into a final climax high into this trend line. I wouldn't be surprised by the end of the month if we had a topping tail at it. We tried it at this trend line right here, but again, there was no confirmation. As we sold off going into the election, we were hitting key support at the 50-period moving average and horizontal support. We could still move to new all-time highs, still reach my target level of 6,000. Evidence of a top. I told you that over and over again. Continue to talk about these trend lines right here, and we're about to hit the one trend line here. Reach 6,000, we turned off of it. We'll probably form a divergence and reach it and go slam into this trend line. And if we overthrow it, we might overthrow it. We might go to 6,100. Looking for a peak right around the 6,020 to 6,040 area, that low to mid 6,000 area. Or maybe we overthrow it a little bit and we go to 6,100. But I believe I see the diversions complete on the 60-minute chart next week. But this is the trend line I'm watching. And again, just eyeballing it. It's right around 6,020, 6,040, give or take. And I'm just eyeballing it. It move as high as 6,100, but I am looking for this level to be tagged probably next week and then a turn off of it. Before the month ends, we can get another topping tail. Remember last month I told you we could get back-to-back topping tails. Even if we go to a new high, we could still reach this 6,000 area. Well, here we are talking about new all-time highs, followed by a topping process, followed by a reversal to usher in a bear market. People don't want to hear that. Some people have selective hearing, and they turn, I've been talking about these all-time highs, S&P going to new all-time highs, so Nasdaq can go back and fill the gap at 20,400. I've been talking about that throughout July sell-off and the last several months. Now we're here. It's gone a little bit higher, and I told you that might be the case. I told you I thought the July peak was it, but I told you I could be wrong about that, and we can go up and slam up into the trend line again. We're doing it. The S&P was going to make new all-time highs. A lot of people, for a top, they don't want to hear that part. Not hearing me say new all-time highs, a topping process, you're not listening to a word I'm saying, because that's what I've been talking about months now. He's going to make new all-time highs, so Nasdaq can fill the gap at 20,400. I've said it a million times. So here we are in this window now, and probably going to reach this trend line. We're just below it, just by a few points. We'll probably reach it next week. Could be before the month is over, we get a topping tail here and get a shooting star, something that looks like this, but only much more exaggerated. much bigger topping tail. As we're just under that monthly trend line, I've been talking about the divergences in the weekly time frame. We've got it on the Dow, we've got it on the S&P, and now we have it on the Nasdaq. I talked about that low to mid 6,000 area on the monthly chart. Overthrowing the trend line, connecting this peak here and the peak over here, which again is parallel to, if we exclude the shadow, these two levels right here. If we include the shadow right here, it would take us up very, very close. We're just underneath it. It would take us very close to the target level. We hit a high of 6,012, I believe. Yes, we were up 4.66%. We were up just above the 6,000 area and turned off of it. S&P gained 267 points, bouncing off the level of support with that bullish divergence that played out on the 60-minute chart that I talked about on Monday. I think it completed on Tuesday and then again began to play out, and then we saw the rally on Wednesday. Big move up, 267 points. I talked about coming back up. Remember, coming back up to this trend line. I told you we could overthrow it. If we do, then again, this other trend line comes into play. That would take us right up to trend line in the monthly time frame. Should we reach this level, that's probably going to be the case. But you've got to really, again, still nice looking channel, whether excluding the shadow or including it. If we now include this shadow right here, you still have a really nice looking parallel channel. Divergences aren't going away. Wall Street's celebrating certainty, regulation, an extension of the tax cuts, good economic policy. Wall Street's celebrating. But again, it's not going to stop the recession from happening. Divergences aren't going to go away. I told you we could see the RSI turn back up and get another reference point of a divergence, talking about going up to this trend line or overthrowing it. That happened. At support, we can go see new highs to try to backtest the broken trend lines on the daily chart. We did that. Again, I'd be watching that monthly trend line, that 6,020 to 40 area, the low to mid 6,000 area. Again, we may even overthrow the trend line a little bit and go to the 6,100 area. Got a shot in the next 3 or 4 sessions, and with the inflation data next week, that you're probably going to hit the trend line in the monthly time frame and probably hit this trend line, including the shadow, and complete the diversions. And by the end of the week, you could turn down and see the diversions begin to play out by the end of the week. That could very well could happen if we set up a diversion, start selling off Monday, maybe Tuesday, rebound back up. The diversions over the next 3 or 4 sessions on the 60-minute chart, on the daily chart, then begin to turn. It could happen over the next 3 or 4 sessions, counting the inflation data. Again, good chance we're going to continue to go a little bit higher and hit that monthly trend line. If we do, then this is a trend line that I'll be watching here, the blue trend line on the S&P 500. Just quickly, this MACD in the weekly time frame, it had started the week off rolling over. Started the week off forming that divergence on the 60-minute chart, and then we had the big rally on Wednesday with the presidential election, with certainty, election results, market celebrating, and it was prevented from the crossover. Again, very similar to what we had over here. We started to roll over. We turned back up a couple of times. We tried to turn back up. But again, it still formed the divergence. It still played out. Divergences are not going away. We're still seeing a lower high. A divergence is when the indicator makes a lower high and price makes a higher high. But again, if we can reach my target level on the monthly chart, I think you'll reach this upper blue trend line here next week, be surrounding the inflation data. And then I think that we could turn, if we complete a triple divergence on the 60-minute chart, a little divergence that to give us a late day sell-off on Friday. You'll see in this video if you watch it all the way through. Ahead of the election, I talked about a rally with the election or with the Fed or with both, because again, we are at major support on the S&P and the Nasdaq. The Dow had just dropped below the 50 period. The others were at it. But I talked about these RSIs turning back up and getting another reference point. The Dow came right back to a perfectly parallel trend line to this lower boundary. But again, it's got these divergences. Reference points have only given us corrective moves so far. The multiple point diversions will eventually give us a reverse. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. Take a moment to do that. I would really appreciate it. Need to hear from you in order to make it work. Just put it all out there. Let you support the channel, do what you can to help out. Follow the link below to take you to a secured site. If you could take a moment to do that, I would really be very grateful. Thank you for your consideration for that. Later in the video, talking about the Nasdaq, monthly, the weekly, the daily, the 60-minute chart. So stay tuned for that. Nasdaq's just below the trend line here if we include the shadow. Added if we exclude the shadow, similar to the S&P weekly, and again just right below that trend line in the monthly time frame. Mid-October, I told you we were forming the rising wedge here. Okay, the two trend lines, including the shadow and excluding the shadow, we broke down right here. But I told you we need to take out the low right here and get confirmation. We finally did it, breaking this other trend line right here. We finally did it. There's no follow through, and we bounced off key support. I talked about last weekend, and on Monday and Tuesday, I talked about rallies surrounding the presidential election results, and with the Fed, I talked about back testing one or both of these trend lines over and over, and I told you we can move to new highs, and if we do, my target level of 6,000 can be reached, that low 6,000 area on the monthly chart. There was no confirmation of the second trend line that broke. It just broke, and we bounced off the 50. No confirmation or follow through. And of the first trend line that broke, we only got confirmation, no follow through. It was not a real move. Talked about a rally back up to the trend lines. We can even move to new high. I told you there's no evidence that we have a top in right there. Bounced off horizontal support just above it at our 50-period moving average. I told you we could still form a multiple point divergence on these indicators. MACD is likely doing that. RSI may be doing that, or it might get a new extreme, one or the other. But I told you we could reach the trend line on the chart. I've been talking about over and over again. My target level is 5750 to the 6,000 area. Now there, filling up. I told you we were going to go back in July. We were going to go back and eventually fill the gap on the Nasdaq 100. That would take the S&P to new highs. Mid-October, we finally saw over here peak on the S&P 500, and we finally filled the gap on the Nasdaq 100, and he began to sell off. Nasdaq went slightly higher, and then it sold off. We're rallying to new highs above. Remember, I was talking about the triangle here could take us to one more push higher to that trend line. We had a breakdown, a fake out. Now we're getting the move. Talking about S&P, all-time highs, all-time highs. Over here with the Fed move, we're going to get a Fed pivot rally. We got it. I'm looking for a topping process near the trend line in the monthly time frame, and again, we'll likely witness that, and then the market will top and begin to reverse and start to price in a recession. We could rally back up and back test these trend lines that I talked about, and if we did, we could see the side turn back up in the weekly time frame, rally towards that upper boundary channel line, and even overthrow it. We overthrew it. Here we are. Right at 6,000. We turned off of it. We came up to this trend line, kind of interesting there. Again, I think you got a good shot at a divergence forming. I see one in this most recent price action here. We may see the RSI turn down and turn back up and form a little tiny divergence here. Start to sell off early on next week, which I think we could, and then turn back up. And I'll show you why I think that that could be the case. It was the case over here. I'll show you on the 60-minute chart, but again, we had a peak, and a few days later, we moved to a new high, and we've completed a topping process, and we completed the divergence over here. A very similar situation with the peak that formed right here, and again, you had a peak, and then you formed a divergence, and we can look at divergences over and over again. You can see a downturn of a day or two, and then turn back up. Maybe it's just a day, maybe it's a couple of days, and then you turn back up, and over a couple of days you could see a peak here coming back just slightly above this level. Again, our target range, that low to mid 6,000 area on the monthly chart. Warned, bounce off this level of support to backtest the trend lines. Told you we very well could go to new highs and reach my objective target level. People, they don't, because I'm talking about a topping process that, again, takes its time. People don't want to hear, oh, the S&P is going to go make new all-time highs as the Nasdaq goes and fills the top. And I told you that if I about the July peak being the top, we could go make a new high and slam into the trend line again on Nasdaq, and we've now seen that happen. I told you why I thought the peak was a top. You're hitting the same trend lines that we're approaching right now in the monthly time frame. As we get this rally back up, we have the gap with the the results of the presidential election, and then again we built upon that there on Thursday and Friday with the Fed. We have a 4-day winning streak. We'll be watching to see if we get a pullback and then if a divergence develops. Now keep in mind we're coming up to this trend line again. I'm going to show you the 60-minute chart because again it could form a divergence very similar to what I'm looking for right here in the daily time frame if we pull back and then just come back up maybe into this trend line or maybe overthrow it a little bit like we did here. We could form a divergence here on the RSI in the next few days, on into next week. We're going to get the inflation data Wednesday and Thursday of next week. Peak with it, could sell off with it. Next week, you've got a shot at completing, tagging that trend line on the monthly time frame and peaking and starting to reverse off of it. We're there at the level that I've been looking for, and we've gotten the Fed pivot rally that I warned you about months before we got the Fed pivot over here. I told you we were going to get a Fed pivot rally, and it likely end up leading to a topping process. Warned you about new all-time highs over and over. Fed pivot rally, new all-time highs at the Fed meeting, and again could see a topping process surrounding that Fed meeting, as so often is the case, and meetings call the turns. Fed meeting was a continuation. I'll talk about that later. Nevertheless, I digress. As we're coming up here, could see a divergence in this most recent price action. If we start to turn down on Monday, I think we will. Monday's going to be a down day and break the winning streak. But we can form a divergence here. We can complete a larger divergence, maybe a larger divergence over here with this previous peak if we continue to have it form. But again, a Class A divergence here on the MACD. Again, we could pull back and then turn back up and then eventually see the MACD roll over at some point next week and complete the divergence, and that could be surrounding the inflation data. Now, the S&P is forming a divergence on the 60-minute chart. It will likely form a larger divergence. We're getting the same thing on the Nasdaq, the same thing on the Dow. I'll zoom in and show you this up close, but I want to remind you, remember last week, I was talking earlier this week, before we had the rally, I told you we were forming this divergence on the 60-minute chart. Nasdaq got a higher low. S&P moved to a lower low. They diverged from one another. I told you there was a very good chance we're going to get a rally back up to those trend lines and bounce off our 50 period and this horizontal level of support. Talked about that at great length and detail. It played out. I talked about the triangle right here. I told you we could still see an upward resolution. Well, we had a fake out. We broke down below the triangle and then we got back above it. Back to support, but this move was never confirmed being a follow-through. It was to have confirmation and a follow-through. It only got confirmation to the breakdown of the trend line. And again, we're going back and back testing that trend line and moving just above it now. Upper boundary, which I showed you on the daily chart. But you have this. We're probably going to see it come down and form a divergence that looks something like that over the next few trading sessions, maybe over the next 3 or 4 sessions. That's likely going to be the case, surrounding tagging that monthly trend line in the monthly time frame, that long-term, nearly 100-year trend line. So again, I talked about this bullish divergence that played out. I talked about the bearish divergence back over here. That gave us a sideways correction. We had a false breakdown. We bounced off support, and now we've come back. And the rally I talked about that could happen over here, it's now happened after a fake move back to support. We're going to sell off, see the MACD roll over further and form a divergence. We'll probably see, we've got a divergence right here, really a Class B divergence, almost 2 equal peaks and price moving higher. Nasdaq and S&P all have divergences on the 60-minute charts. See something like this where we move down, but then come back up, and over, again, this was over 3 or 4 days right here, you formed this divergence that gave us the July peak. I think you'll see something similar to that next week and hit that long-term trend line and likely begin to turn off of it and turn off of it sharply. I'll show you this area close up here. Bullish divergence really worked out very nicely. Just a move back up to the trend lines I talked about. And here it is up close. And again, I've marked this as a possible little miniature head and shoulders that could be under construction. Here's that triangle. We had a downward resolution, but then we bounced off support of horizontal support in our 50 period. Here's the presidential gap higher, the presidential election results, the gap higher, and then the Fed meeting. Got a little topic to at the very end of the session there on Friday and began to turn down. We're probably going to turn down, maybe to gap support, maybe we fill the gap. And then I think you're going to, or maybe, it's deep or whatever, but I think you're going to see some kind of downturn and then turn back up. And I think you're going to go above this level and form a divergence there. And then I think you're going to see a major reversal. And that could be surrounding inflation data. What if the inflation data ticks back up? Or maybe we rally on the inflation data, we get a peak on it. We've seen that happen before. On September, bottom develop with the inflation data. Bottoms and tops often form around key economic data like the inflation data or the jobs report. This is what I think is likely going to be the case. I think we're going to revisit that 6,000 area again. I think we'll turn off of it a little bit more Monday, maybe bottom out Monday or Tuesday or something, try to turn back up. We peak with the inflation data, but then reverse. And again, oftentimes with the inflation data, oftentimes you'll get one day up and the next day down. We're going to get the CPI on Wednesday. We'll get the PPI on Thursday. We'll be watching to see what happens next week. But I think you're going to complete this divergence next week over the next 3 or 4 sessions. We'll tag, and we didn't quite reach it. I think you're going to tag that trend line in the monthly time frame in forming this divergence. Could complete a major top. This divergence could complete a major top. You see, again, we go higher. We have the peak and we go lower, and then we go up and we go higher in over the course of a few days. And I think that is very possible as we go into the inflation data next week. The market peaks ahead of NVIDIA earnings on the 20th. If we see a sell-off with the NVIDIA earnings, that could be very problematic for the Nasdaq. So be watching to see if this divergence develops. Again, we got this little tiny one here, almost 2 equal peaks there. Class B divergence, a little better seen on the Dow and the Nasdaq. Is on the Dow up close. Again, you got this nice looking divergence here. The Dow got a topping tail on the 60-minute chart, started to turn down the last hour of trading. Again, if we pull back, again, we could see close or another push above 44,000. We hit it and we turned off of it. S&P hit 6,000 and turned off of it. Probably revisit those levels, reach the trend line on the monthly time frame on the S&P 500. But the Dow's got that nice divergence as well. Again, we're likely going to have a down day on Monday. On the Nasdaq, same thing. Again, you've got this divergence. We'll probably see some kind of sell-off moving towards the gap support. Maybe we fill the gap if we get something bigger, but we'll probably move towards the gap support area, maybe hold above it, maybe test it, and then again probably get one more push higher. Or do we get a divergence? And again, down here at the bottom, S&P right before the election rally, S&P got a lower low, Nasdaq got a higher low. Sometimes they diverge from one another. At the peak over here, just before this sell-off right here, Nasdaq moved higher. Got a divergence. S&P got a lower high. They diverge at short-term turning points or major turning points. So again, we'll be watching. Minute chart of the Nasdaq. Again, quickly look at Nasdaq. Nasdaq up big time. Again, we're going to go fill that gap. If I told you if I'm wrong about this being a peak, we're going to go up and slam up into these trend lines again in the monthly and the weekly time frame. Here we are. Nasdaq up 5.41%, up 1,084 points for the week. Big rally back up into this trend line. Again, a perfectly parallel trend line to the pandemic low, to the 2022 low. And again, just coming up here. If you exclude the shadow, we're at it, okay? But if you include the shadow, we're just a fraction below it, forming a divergence. The RSI is not moving to a new high. The CD is making a lower high. It's still pointing up, but it's not moving to new highs. Again, just like at the 2021 top, again, there was a divergence present with these two peaks right here and right here. And again, you're likely going to see something very similar to that here. The time it rolls over, you'll already be selling off. We were already selling off when it rolled over the first time, and it was already selling off when we after we completed the diversions. It already started the sell-off got this channel from again, the pandemic low over here from 2020. This looking channel, but then you got your longer term channel. We're just slightly below that level if we include the shadow. Look at the Nasdaq monthly chart, same thing. Again, we're coming right up into the trend line here. This is why I told you I thought we had a top with the July peak, because we hit that trend line right on the nose. We're coming up and we're slamming into it right now. So again, I think you're going to see a top develop here and eventually come down to the midpoint here, or towards the pandemic low here, somewhere in between there. But that's where I think you're eventually headed. And again, I think you could see at least a 60% drop on Nasdaq. I think it can hit this trend line or just slightly overthrow it, and I think you'll see a turn here. Nasdaq daily chart again rallied today, but didn't really rally very much. Should say continued the rally. We were up 15 points, but we were pretty much flat for the session. We were up 0.07%, so pretty much flat. The Dow and the S&P got a bigger rally, and again, we kind of stalled up this trend line right here. Possible larger bearish rising wedge if we carving out that pattern. And again, it's wedges, you can overthrow them a little bit, the upper boundary, and then they still can play out, but they often get an overthrow. And we're just slightly below that monthly trend line. We're just slightly below the weekly trend line. Could still see a little bit more upside, or again start to sell off a little bit, and then again maybe just come back and get something like that, or overthrow this area somewhat, or a little bit more. We get a big overthrow, but got to be watching. Again, do we see some kind of divergence develop right here and get something surrounding this trend line, or slightly overthrowing it if this pattern is to play out. So just something I'm paying attention to. And again, nice looking divergence forming here on the MACD, if that does in fact form. And look at the 60-minute chart again, connecting those peaks over here. Again, pointing up to where we're at right now. Saw the same thing on the daily chart. We get a little divergence here on the 60-minute chart. So again, do we see something like this and maybe get an overthrow, or just coming back up here and hitting this level once again, and then complete this possible rising wedge that is expanding on the Nasdaq? And I've redrawn the trend line from this lower boundary now that we've bounced. And again, about a rally because S&P had formed a divergence and Nasdaq diverged from the S&P at this low. We talked about that for the presidential election results came in. Again, big rally with the presidential election. MACD rolling over here as we slam up into that level. So I think you get a pullback. Maybe you fill the gap. Maybe you go to gap support. But I think you're going to see a divergence develop on the S&P and Nasdaq in all likelihood next week, probably surrounding the inflation data. And then I think you're going to start a reversal if we turn sharply off of those monthly and weekly trend lines.